Hello friends, welcome to learning sessions, and today in this video we are going to discuss about the retail asset products. In the last video we have already covered the retail liability products, and if you want to go through all the previous videos of retail banking and all the other subjects of the Jaiib, simply do subscribe to our channel right now and press the bell notification icon so that you get updated whenever we upload the new videos. The full course of Jaiib is available where you will be getting the full course videos, chapter wise previous year questions, mock test, mega mock test, and much more so as to clear the Jaiib exam in the very first attempt. So what are you waiting for? Do enroll right now, and let me tell you that simply on sign up you'll be getting access to all the PDFs of all the papers of Jaiib free of cost. So do sign up right now visiting the website jaib.learningsessions.in and start preparing for the same. So let's start the session over here, and it's related to the retail asset product. So whensoever we are talking about the asset product over there, it means that the bank is actually earning income from there, right? So whatsoever the credit which has been disbursed, that's actually related to the asset product. We are talking about the financial products or services which are being offered by the banks to the individuals, to the small businesses over there in the process of giving loans and advances to the customers over there. We basically want to do what? We basically want to fulfill the financial needs of the individual, such as particularly they want to buy a house, they want to buy a car, or it may be the case they want to buy a consumer loan product over there. So that's all related to what? That's all related to the retail asset product over there. So we are going to discuss for all these retail asset products one by one. First of all, it's related to home loan. Let's say the case that you want to build a house, you want to purchase a plot and want to construct a house upon the same, and it may be the case that you want to buy a built up house or flat over there, and these all come under the category of the home loans over there. So whomsoever the salaried persons or the business professionals or the self-employed persons or even the NRI persons or persons of Indian origin, HUF, partnership firms, corporates for their employees over there, all are actually eligible for the housing loan purposes. And further, there is one scenario for the same, that the applicant should not be enjoying the credit facility for the same purpose from any other institution. Then the person can be getting the home loan easily over there, and the person should not be a defaulter. Definitely that's the case, and person must be capable of entering into a legal and valid contract over there. For what purposes home loan can be given? It can be given for purchase or particularly construct of a house or flat over there, so as to renovate or extend the existing flat or house over there. It may also be the case that you want to purchase a plot for the purpose of construction of house on the same, and also it may be related to that you want to acquire the household articles along with the house or flat for furnishing the house flat over there, right? So for this all purposes home loan can be granted. And if we talk about the quantum of the loan, that what quantum of loan will be given, that basically there is no upper limit, that if you want to basically go for construction purposes, for purchase of house or flat purposes, there is no upper limit as such, but banks actually look for the quantum of the loan from the income criteria. Let's say case if your income is well, in that scenario the bank will be looking into the thing that what is your home take salary, and in the banking culture averagely it is taken as that 40% of the take home salary must be there. Like let's say case that A is a person who want to basically get a housing loan and is having a monthly salary of 50,000 rupees, right? In that scenario the maximum EMI amount can be up to rupees 30,000. Why 30,000? Because take home salary, because the take home salary after deduction of each and every other EMIs over there or taxes over there or any other thing over there, the take home salary must be at least 40% of the same, and where the monthly income is actually good enough, in that scenario the take home salary can be reduced to 15% also, right? So that will be deciding that will be one of the factor which will be deciding the particular the quantum of the loan, and the other one it's related to the credit worthiness of the borrower, and the other main thing that basically decides the quantum of the loan, that's actually the repayment tenure, right? So the repayment tenure is maximum up to 30 years or maximum up to the age of 65 years. Some banks also do allow the repayment age up to 70 years over there. So that basically bank to bank differs over there, right? Now basically let's have a look at the eligible quantum of loan. As I already told you, it basically depends upon the income and also depends upon the repayment capacity of the borrower. And as I told you, net take home salary or take home income should not be generally less than 40% of the gross green salary or the income of the applicant over there, right? And for, as I told you, that for high income individuals or for high income applicants, this take home salary can also be reduced to 15% by some of the banks, right? Now let us have a look at the margin. Now margin is the amount which will be actually be deposited by the customer itself. Let's say case the total value of the, or the total cost of the house project was 1 crore rupees. Let's say the case that we assume that the margin is 20%. In that scenario, the maximum loan which can be granted by the bank can be up to 80 lakh rupees, and 20 lakh are to be deposited by the depositor, by the borrower as margin, right? So up to 30 lakh rupees, the margin percentage is 10%. For 30 to 70 lakh, it is 20%. And for 75 lakh above, 25% of margin is to be maintained. But as I say, that this particular margin may vary from bank to bank, right? And further, while considering the cost of the construction, the bank particularly never considers the stamp duty registration charges or any other documentation charges. Those are not considered while the applicant is going to buy a built up house over there. But in the case of EWS, that is economic weaker section, and in case of LIG, if the total cost of the house or the total cost of housing project does not exceed rupees 10 lakh, in that scenario, the cost of particular registration or stamp duty registration, that can be considered in the cost of house itself, right, for loan purposes, right? And further, if we look for the security purposes, then in case of housing loan, a primary security is available in the form of mortgage that is created on the property itself, and also collateral security may also be provided. And also in case of housing loan, if we talk about the disbursement is actually in phases, because if you're going to construct a house, it's not the case that you are sanctioned a loan of rupees 1 crore by the bank and you will be getting rupees 1 crore just then only. It's not the case. You will be given the amount in different particular installments over there, or different particular phases over there. Like I just told you, like let's say you want to basically purchase a house and the land is costing rupees 50 lakh, and after that 50 lakh is to be used for construction of the house over there, right? In that scenario, let's say case for the purchase of land, a loan amount of rupees 50 lakh was given, and further after the for the construction of house in different phases, like for the foundation phase, for the plinth phase, for final construction phase, you will be given in different phases over there. Now the number of installments may vary from criteria to criteria, and in case basically where the applicant is to buy the built up house or old flat or house is to be purchased, in that scenario the complete upfront payment can be made, right? And also moratorium period is allowed. Moratorium period is actually that period in which you need not to pay the EMIs, but let me tell you one thing, that interest is charged during that particular period over there. And further, the total maximum repayment period for the housing loan cannot be exceeding 30 years, including the moratorium period, right? Let's say the case that that you want to construct a house and you took a loan of rupees 10 lakh from the bank for a period for 20 years, right? And let's say the case that bank allowed you a moratorium period of 18 months over there, right? In that scenario, this 18-month period is actually inclusive in this 20-year period over there. For this initial 18-month period, you need not to pay the installments, but the interest will be accrued for this particular period also. And also after the 18 months, whatsoever the accrued interest component will be there, that will be added to the total loan component. Let's say case the total interest component for the 18 month was, let's say it was 2 lakh rupees. Now 2 lakh plus 10 lakh, the total amount will be 12 lakh rupees. And further, there will be rescheduling, and the EMIs will be scheduled based upon this total amount over there, right? And further, for the construction of house, the moratorium period can be allowed maximum up to 18 months. And for if you're basically going to purchase a built up house over there, in that scenario, the moratorium period is of 3 months, right? And further, it's related to prepayment issues. So generally, public sector banks do not charge their customers for any kind of prepayment, and there is also a ruling by the Reserve Bank of India that if a floating rate of interest is being charged by the banks in case of housing loans, in that scenario no prepayment charges can be charged by the banks over there, right? And further, it's related to repayment or collection. I already told you maximum repayment period is 30 years, including the moratorium period over there. And further, loan must be repaid before retirement in case of the salaried person. If you're a salaried person and if you want to basically take a home loan, in that scenario the loan must be repaid before the retirement age over there. And in other cases it can go up to 65 years, and in other cases also it is extendable up to 70 years over there, right? Further, after that, it's related to home improvement loans over there. Now, home improvement, basically, who is eligible? Individuals are eligible, members of cooperative societies are eligible who are basically owning a flat or house over there. And what are the other conditions? That the person or the candidate or the applicant must be having a regular income, and this regular income can be from agriculture or from the salary of for the individuals over there, and they must be having at least 3 years of minimum confirmed service. Okay, 3 years of minimum confirmed service. Only then particularly they will be eligible for this particular period over there, and minimum 3 years standing in the respective field of self-employed professional. If they are particularly self-employed, in that scenario they must be having experience of at least 3 years in that particular field over there, then they are eligible. And further, if we talk about the home improvement loan, you can take loan for home repair, renovation, upgradation, redo, painting or other repairs, etc. And further, we talk about the amount of the loan. Now the loan quantum actually depends upon the particular lender policy, that what is the policy related to lender and what is the borrower's capacity or eligibility related to, and further also dependent upon the scope of the project, that what is the maximum cost that can be there in this particular project, right? That particularly depends upon the same. And if we talk about the margin case of the home improvement loan, it is ranging from 20 to 50%. And if we talk about the security, the equitable mortgage will be created. Equitable mortgage, in this case also the equitable mortgage is created. What do you mean by equitable mortgage? The charge of mortgage will be created. And further, in this scenario, the borrower is whom? The borrower is mortgager. The borrower is mortgager, and the party, that is a lender in whose name this charge is created, that is mortgagee, that is a bank is mortgagee in this scenario, right? So that's a case related to it. And further, moratorium period of 3 months can be allowed over there. If we talk about the disbursement, now the disbursement for repair and renovation can be in different phases, and also it can be one-time disbursement. That depends on case to case. And repayment as allowed by the banks, it can go up to 10 years, 15 years, depending upon bank policy itself, right? After that, it's related to home decor loan. Now basically, homeowner, it may be the case they want to transform their home, or they want to basically enhance the aesthetics of the home or functionality of their home over there. Now in that scenario, if they want to go for the interior design or something related expenses, they can take the home decor loan. And for this particular purpose also, the individuals, group of individuals, members of the cooperative society who are owning a flat or house, those are eligible. They must be having a regular income from the different sources. And further, if they're self-employed, they must be having the experience of 3 years in that particular part over there. That's actually related to it. And further, if they're salaried person, in that scenario they must be having 3 years of confirmed service. Okay, then they will be eligible. And if we talk about the purpose of the loan, the home decor loan can be given for the furnishing of home or flat, for the decoration or for air conditioning purposes. The home decor loan can be given, and the quantum of loan basically dependent upon the lender policy or eligibility criteria or the scope of the project over there. And particularly also the margin is varying from 20 to 50% as we have considered. And same way the charge will be created by way of equitable mortgage on the property. Moratorium maximum for 3 months can be allowed. And if we talk about the disbursement, dependent upon the nature of repair and renovation, the disbursement will be there, and repayment as allowed by the banks over there, right? So that's about the home decor loans over there. And after that, it's related to PMAY. PMAY is actually related to Pradhan Mantri Awas Yojana. Now this project was basically set up and launched in 2015. On 25th of June 2015, the project was launched, and initially this project was for 5 years, but there was extension in the project, and now this is particularly eligible there over till 31st of December 2024. It's eligible over there, right? And particularly it's related to that providing the credit to the people who are basically belonging to the different categories, whether they are economic weaker section or they are belonging to the LIG category, that is low income group, or medium income group part 1 or medium income group category 2 over there, right? So there is a CLSS. Now CLSS is actually what? This is credit linked subsidy scheme, which will be given by Government of India, so that the persons are facilitated so that they can go for the affordable housing at a low and moderate income residents in country over there, right? So that was the main purpose related to PM Awas Yojana or Pradhan Mantri Prime Minister Awas Yojana over there. So beneficiary under the PM AY, that is a Pradhan Mantri Awas Yojana, they are eligible for the interest subsidy also. Okay, so you will be getting the capital subsidy or particularly credit linked subsidy scheme. This is particularly credit, not capital subsidy, it is a credit linked subsidy scheme is here. And further, the beneficiaries will be eligible for the interest subsidy. They will be getting the interest subsidy over there. They will be getting the interest subsidy over there, right? So that's the scenario. Now let's have a look at the beneficiary. The beneficiary family will comprise husband, wife, unmarried sons and unmarried daughter. So once the son or daughter are married, they will be considered as a different family over there, and they can be applying on their part, right? And further, the beneficiary family should not be owning any of the pakka house, because a declaration in this regard is to be given that they are not owning any of the pakka house in the name of any of the member of the family over there in any part of India, right? And further, an adult earning memory, as I told you, an adult earning particularly we can say an adult earning member can be treated as a separate household subject over there. So what are the main conditions? That family is to be considered as one own, and it will be comprising of husband, wife, unmarried daughters and unmarried sons over there. Those will be considered. And further, if person is adult and further if they're earning of their own, they can be considered as a separate, they can be considered as separate household over there, irrespective of the marital status over there. It's not related to if they are married, then only they will be considered as separate status. Even if they are not married, they can be considered as separate status if they are married or not married over there. And now let's understand the classification of the beneficiaries over there. As I told you, there are 4 categories. That is, EWS is basically what it is: economically weaker section. Now economically weaker section, the income criterion is actually up to 3 lakh rupees per annum per family. We are talking about the EWS household. We are not talking about individual person over there. We are talking about the different members in the family over there, and the household income for the same should not be exceeding 3 lakh rupees. Then it is under EWS. And if the income is ranging from 3 lakh to 6 lakh rupees per annum, it is under LIG. If the income is ranging from 6 lakh to 12 lakh rupees per annum, it is MIG1. And if the income is ranging from 12 lakh to 18 lakh rupees per annum, it is MIG2 category over there, right? And what are the different parameters over there? Let's have a look at it. So the interest subsidy that will be available for EWS and LIG, that is same component, that is 6.5%, and for MIG1 and it is 4%, and for MIG2 it is 3%. Now the EWS is particularly up to 3 lakh rupees. For particularly LIG, it is up to 3 to 6 lakh rupees. For MIG1, 6 to 12 lakh rupees, and for MIG2 it is 12 to 18 lakh rupees over there. And in that scenario, the interest subsidy for LIG and EWS, it is 6.5%. For MIG1 it is 4%. For MIG2 it is 3%. And maximum loan tenure in all the scenarios can be 20 years. Now the maximum, this is actually the maximum tenure for which you will be getting the interest subsidy, not related to if you want to basically take a loan for, let's say, 30 years, that is also allowed. That is also allowed. But there is interest subsidy which is available. Now interest subsidy will be available as per the computation of 20 years repayment period only, and not more than that. That's the scenario that I meant to say over here, right? And maximum loan which is actually eligible for subsidy over there, for which you will be getting the subsidy, that is 6 lakh rupees for EWS and LIG, and 9 lakh rupees for MIG1, and 12 lakh rupees for MIG2 over there. And also, as I told you, higher amount of loan can also be taken. It's not the case that you can be taking maximum of 6 lakh rupees of loan so as to enjoy the benefits under the PMAY. Not that the case. You can be taking a higher loan, but the loan for which the benefits will be available, it is maximum to the quantum of rupees 6 lakh in case of EWS and LIG, for rupees 9 lakh in case of MIG1, and maximum for rupees 12 lakh in case of MIG2 over there, right? And maximum carpet area condition in case of EWS, it is 30 square meters. For LIG, it is particularly 60 square meters, and for MIG1 it is 120 square meters, and for MIG2 it is 150 square meters. So this is a chart that you need to memorize. So interest subsidy component you need to memorize, the tenor you need to memorize, the maximum loan amount which is eligible, that is you need to memorize, and the maximum carpet area you need to memorize, because the questions can be directly asked from the same, right? And after that, it's related to auto loan. Now auto loan is actually related to when you want to purchase a 2-wheeler or 4-wheeler, or it may be a new one or it may be a second-hand one, right? So for both the cases, the loan quantum can be allowed. So private sector banks do adopt a model involving the manufacturer, dealer and the financier. Now in that scenario, they will be having a contract between the financier model and the customer over there. So whosoever actually customer visit the dealer over there, they will be saying that you can be taking the loan from this particular bank, let's say HDFC bank over there, and ultimately commission will be given to a dealer in that scenario, and loan will be granted to that particular customer based upon the eligibility criteria, right? And now let's have a look at the different particulars of the same. Now who is eligible? Now individual who is having confirmed service in government or public sector undertakings or reputed private organizations over there or institutions over there, those are eligible. If the person is self-employed and if the person is professional, they are also eligible. If we look for the purpose of loan, the purpose of loan can be so as to buy the new 4-wheeler or 2-wheeler or used, that is old 4-wheeler and 2-wheeler. But in case of old vehicles, the age of car should not be more than 5 years. Only in that scenario the loan for second hand car will be given, otherwise not, right? And the amount of loan, there is no upper ceiling as such, that basically varies from bank to bank purposes. And if we talk about the margin for the new car, it is 10%, and for the particularly for the second hand car, the margin can be from 25% to 30%, and for also 2-wheelers it is 10%, but that would be as per the bank policy, and for that can be different for different categories of the customers over there. And further we talk about the security, and in that scenario charge of hypothecation, the charge of hypothecation will be created. Now hypothecation is defined under section 2N of the Surface Act over there. In that scenario the possession of the asset is with the borrower, and for if there is default in the payment, in that scenario it can be converted into pledge, that the possession can be taken by the lender and ultimately it can be sold. And a JRC, that is a joint registration of certificate, JRC is particularly created in that scenario. That's a security that is given, and other than it, liquid security is acceptable, third party guarantee can be taken, right? So this is the security that is available. And further if we talk about the moratorium, in case of auto loans or vehicle loans, no moratorium period is available. Kindly please note it down, as the moratorium period of 18 months was available in case of construction of house and 3 months was available in other cases. The no moratorium period is available in case of the construction of house. And if we talk about the disbursement, the payment is directly disbursed to the dealer or to the supplier over there. And if we talk about the individual, for 4-wheelers the maximum repayment period can be up to 7 years, and for 2-wheelers it can be for 5 years or 6 years in general, and for second-hand vehicles it can be maximally 3 years, but corporate firms are given maximum 5 years in that scenario also, right? So that's about the auto loan or vehicle loan. And after that it's related to the personal loan. Now personal loans are actually unsecured loans over there, because those are disbursed based upon the personal guarantee of the borrower. Let's say case A is a borrower and further he wants to take a personal loan for, let's say, for any of the expenses purposes, for family maintenance, for any other purposes over there. Now in that scenario person A is disbursed a loan based upon his own guarantee, only, on personal guarantee only. Now that's why these are considered to be unsecured loan, and there is higher credit risk involved. There is higher risk is involved. Now higher is the risk, higher is the interest that will be charged by the bank. That is why if the delinquency rate we are saying that is averagely higher in this particular segment, in that scenario more interest rate is being charged. And further let me tell you that in this particular segment the public sector banks are quite cautious, but the private sector banks are very much aggressive in this particular category, right? And that's the funda. And now let's have a look at the different particulars. So if we talk about the eligibility, salaried persons who are basically having a good job in government sectors or public sector undertaking or reputed segments over there, they are eligible. Other than that, self-employed persons or professionals or individuals who are having high net worth or regular pensioners, they are eligible for the same. And if we look for the purpose, there are multiple purposes. Now it's a unsecured loan. It can be particularly for any of the purposes, like for marriage expenses, for self, for children, for expenses incurred for purchase of the consumer durables. It can be for the education or self or for children over there, for repair, renovation, for any of the purposes it can be given, for legal purposes only, right? And further if we talk about the secure purposes, in that scenario there is personal guarantee which is available in that scenario. If we talk about the quantum of the loan, that basically varies from customer to customer, depends upon the credit worthiness of the borrower, and also may depend upon the schemes which are developed by the bank over there. And if we talk about the eligible amount, that's basically subject to ensuring the repayment capacity of the borrower, as I told you, and the type of security or type of advance which can be given. Now the personal loan can be available in the form of demand loan or in the form of term loan, and also it can be in the form of the overdraft over there, right? So it can be in the form of demand loan or term loan or overdraft over there. And if we talk about the security, definitely as I told you, personal security only is available. And further, if the loan is given for the purchase of consumer durables, if the loan is given for purchase of consumer durables, in that scenario the hypothecation charge can be created on those particular assets. That can be done. And further, collateral security can also be available in the form of liquid security, or it can also be available by creating a pledge charge on gold, ornaments, or NSC or KVPs over there, or bonds over there, or assignment of LIC policy. So liquid security, different type of securities can be accepted, but in broad manner, the security which is available in case of personal loans, it is a personal guarantee which is given. And also, as we basically told you, that is no moratorium in this case also. As per, there was no moratorium in vehicle loan, there is no moratorium in personal loan also. And if we talk about the disbursement, if you're going to buy a consumer durable, in that scenario the payment will be directly made to the vendor over there, and it may also be credited. In general cases, if you are taking loan, let's say for self nourishment or family maintenance purposes, the payment can directly also be credited to the borrower's account over there, right, as a clean loan over there. Okay, now repayment, if we talk about, the repayment can be ranging from 3 years to 5 years. And for secured loans, if particularly consumer personal loan is secured loan, in that scenario the repayment can be maximum up to 5 years over there, right? After that, it's related to education loan. Now let's say case you want to basically your main purpose of education loan is actually related to what? So as to provide individuals with the necessary funds. Now whatsoever the funds which are required by the individuals, so as to cover the cost for pursuing higher education in India or abroad, which may include fees, hostel fee, or books, or supplies, room, board, or travel expenses, or other related expenses. Those all expenses are covered for this particular purpose. That is actually under the education loan. Now let me just tell you for the different purposes related to the same. Now if we talk about the eligibility, if you are having Indian nationality, that is a main requirement related to the same. And further, it will be the case that you have cleared some exam, like we are having the JEE exam or other CET exams over there. So on merit basis, if you're getting admission into the university over there, or you have basically scored the minimum qualifying marks subject to the Reserve Bank of India guidelines, so you will be eligible for that scenario. And for India purposes, you must be eligible. You must be eligible in India for particular higher studies if you are basically going to secure a seat under some recognized course over there, or recognized diploma over there, or professional courses over there, then you are eligible. And if you're going to study abroad, in that scenario, those particular, if you're going for particular graduation purposes or something else, like let's say job oriented professional or technical courses over there, post graduation courses over there, the particular institutions or particular organizations or universities, those must be recognized, those diploma courses must be recognized, then you'll be eligible for the same, right? And if we look for the purpose, as I've already told you, that is need based loan. That is basically to cover the expenses related to the education over there, so as to meet the expenses for pursuing the higher education in India or abroad for the eligible students over there. And if we talk about the quantum of the loan, if you're going to study over here in India, the quantum of the loan is maximum up to 10 lakh rupees. And if you're going to study abroad, the maximum quantum is up to rupees 20 lakh rupees over there. And if we talk about the margin, if you're going to take a loan up to rupees 4 lakh, then in that scenario there is no margin to be maintained. There is no margin to be maintained. But if you're going to study in India, and further, and particularly the amount of the loan is above rupees 4 lakh, then the margin percentage is 5%. And if you're going to study abroad and the amount is basically above rupees 4 lakh, then the margin percentage is 15%, right? Now, what type of expenses are eligible? Now whatsoever the fees which is actually to be paid to the school or college, for the hostel fees to be paid, that is would be as per actual, that is would be as per actual. And also if you were to pay examination or library fee or lab fee, that will be as per actual, that will be allowed. And if you want to pay for travel expenses or passage money or one way or something, like in that scenario, that particular expenses, those particular expenses will not be covered more than 10% of the total tuition fee. So the total tuition fee, let's say it is rupees 6 lakh rupees, in that scenario the travel expenses can be covered up to maximum of quantum of rupees 60,000, not more than that, right? After that, if the insurance premium is to be paid, that will be basically be considered as actual. And if the quotient deposit is to be paid, and for the book particular building fund or a refundable deposit is to be made, that is also 10% of the tuition fee, but not more than that, right? If any amount exceeds, that is to particularly to be deposited by the student itself. And other than that, if you were to purchase the books, equipment, uniform, or purchase of computer at reasonable price or other expenses, maximum of 20% for this behalf can be given of the tuition fee. Let's say the total cost of books etc. or the computer etc. to be purchased was rupees 2 lakh. That was rupees 2 lakh, and the tuition fee is rupees 6 lakh. In that scenario, maximum amount which can be allowed is 20% of 6 lakh, that is equal to 1,20,000, and the rest is to be deposited by the student itself, right? And further, if we talk about the security, in case the loan quantum is up to rupees 4 lakh, no security is required. Only the parents will be becoming the co-borrower. And further, if the loan amount is above rupees 4 lakh and it's up to rupees 7.5 lakh, now the parents will be co-borrower. But other than that, a suitable third party guarantee can be asked for. The suitable third party guarantee can be asked for, but that guarantee can also be waived if the credit guarantee coverage is available. If the credit guarantee coverage is available, in that scenario, no third party guarantee is even required, right? And further, if the loan quantum is above rupees 7.5 lakh, in that scenario, the parents are to be joint borrower, and further tangible collateral security according to the quantum of loan asked and as acceptable to the bank over there, that can be asked in that scenario. So for up to rupees 4 lakh, no collateral security nor nothing is required, no guarantee is required, even only parents will be co-borrower. And for quantum for 4 to 7.5 lakh, there is suitable third party guarantee which is required. But if credit guarantee cover is available, in that scenario, if credit guarantee cover is available, the third party guarantee can be waived off. And above rupees 7.5 lakh, a suitable tangible collateral security can be asked which is acceptable to the bank over there. And if we talk about the moratorium period is basically for the course period plus 1 year. It is course period plus 1 year. Let's say case a person got admission in BTech. Now BTech course is for 4 years. Now the moratorium period is for 4 plus 1 year. It will be for 4 plus 1 year, 1 year after completion of the course over there. And further it may be 6 months from after getting the job, whichsoever is earlier, right? After let's say 4th year, the person got the job, then in that scenario from the date of getting the job, it will be 4 plus 6 months depending upon whichsoever is earlier over there, right? And further, that's related to the moratorium period. Now, as I told you that during the moratorium period, the installments may be serviced or may not be serviced. It's not basically mandatory so as to service the installments in that particular period, but interest can be also be serviced during that particular period. And if the person is actually servicing the interest during the moratorium period, in that case incentives may be available as per the IBA model scheme, right? And further, if we talk about the disbursement is actually not one-time disbursement, is actually stages as per the requirement. And with each disbursement, appropriate margin is to be submitted by the borrower, and further will be deposited directly, will be particularly credited directly to the university or to the vendor of the equipments or for the instruments over there, right? So that's the main case related to it. Okay, I hope that you must have understood the main part. And after that, if we talk about the repayment over there, EMI is particularly can be spent like let's say the course was for 4 years and 1 year was moratorium. After that, the EMIs will commence, and the EMI period can be up to 15 years. This can be up to 15 years over there. And further, if we talk about the insurance, it is mandatory to arrange for a life insurance policy for the students who are actually going to avail the education loans. Now this is basically discretion of the individual banks over there, but it is mandatory to arrange for a life insurance. Other features, if we look for the same, now students actually who are to set up the startup units. Let's say case a person A took the education loan and they are also interested in startup some unit over there. In that scenario, the moratorium of extra period can be given. Over there. So moratorium of whatsoever the principal and interest component that was to be paid over there, a moratorium of 2 years can be allowed during the incubation period of the startup over there, right? And while computing the loans requirement, the scholarship fees waiver, if any, available to the students borrower, they can be taken into account while computing the loan which is actually required by the student over there. And further, let's say if the student is actually not able to complete the course within the scheduled time. Let's say case the BTech course was for 4 years, but the student was not able to complete the course for the same. In that scenario, an extension of 2 years can be given so as to complete the course. Okay, maximum period of 2 years can be given in that scenario. And in any scenario, let's say student basically discontinues the course midway, that he is not able to continue, she is not able to continue the course midway. In that scenario, appropriate repayment schedule will be worked out by the bank in consultation with the student and their parents, right? And further, if you're servicing during the moratorium period, if you're servicing the interest to the bank over there, so whatsoever the interest which was charged, you are servicing the interest during the moratorium period over there. In that scenario, 1% of the concession can be given to you. 1% interest concession may be provided by the bank if interest is serviced during the study period and subsequent moratorium period to the commencement of the repayment, right? And further, existence of earlier education loan to any of the brother or sister in the same family will not be affecting the eligibility of any other meritorious student from the same family, right? So this is quite important point. Let's say case A and B are siblings, so has already taken the education loan. Now in that scenario, the education loan criteria for B will be unaffected because it is not related that the same family cannot be having 2 education loans or 3 education loans. It's not the case. The eligibility will not be affected, right? And for the banks may consider top-up loans also. Like let's say case person is here, he basically completed their education, now basically want to study higher, right? Study for higher study also, right? For within the overall eligibility criteria, the bank can be giving them a top-up loan also, that can also be granted to the student over there, right? So the joint borrower should normally be the parents. So if we talk about just because student is there, so student will be jointly executing the documents with their parents over there, and the joint particular borrower should normally be parents, and that can also be the guardian of the student borrower over there. And in case the student is married, in that scenario, the joint borrower can be the spouse or it can be the parents-in-law, right? Further, students can make an application for education loan through Vidya Lakshmi portal also. There is a portal, that is a Vidya Lakshmi portal through which you can making a application for the same, which is actually managed by the Protean Ego Technologies Limited, which was previously managed by the NSDL Quires Infrastructure Limited, right? So that's the main case related to it. Now let's understand the processing of the retail loans. First of all, it is related to process of the application. Now the whomsoever prospective applicants are there, they will be submitting their application. So a loan application is actually received and logged into the system for the further processing over there. That is a step 1, that is a processing the application. And further after that, the second step is related to verification checks over there. So whatsoever the information is actually provided by the applicant over there, the authenticity of the same will be checked, and based upon that we'll be looking into the credit worthiness of the borrower over there, looking at the different things, looking into the income criteria, looking into debt obligation and the other factors over there. The credit score will be arrived at. After that, we will be assessing the value of the collateral which will be available as security over there. That will be related to valuation of the asset over there. And fourth one, it's related to we are to obtain the NEC certificate that there is no charge previously created on the asset over there. That's the fifth step related to basically accepting or obtaining a NEC, that is a non-encumbrance certificate, that no charge has been created over there. And also in case of mortgage or something, let's say case if a legal report is to be or legal opinion is to be obtained from the panel lawyer over there, that is to be taken. And further, based upon all the things, the quantum of finance will be decided, and based upon the LTV, that is loan to value ratio, and all the things will be looked into. And after that, looking into the credit worthiness of the borrower and all the things, looking into the riskiness of the loan, will be deciding the pricing of the loan, that what interest will be charged to the borrower over there. It will be based upon the repayment capacity, it will be based upon the credit worthiness of the borrower, it will be based on the credit score or the borrower profile over there. And after that, advising the loan sanctions, that will be communicating the decision with the borrower related to what amount has been sanctioned, what are the terms and conditions of the loan over there. And further, we'll be receiving the confirmation from the borrower related to if he or she has accepted the loan terms and conditions over there, indicating the execution of the loan document, and ultimately the loan amount will be disbursed. And that is actually related to the next step, that's related to execution of the documents. That's the 11th step over there. And the 12th step related to the disbursement of the loan. Now the disbursement of loan, if it's a clean loan, it can be directly be disbursed into the account of the borrower. And further, if let's say the consumer durables are purchased, or it's a home loan or particular other type of loan, in that scenario the account of the vendor may also be credited, right? And after that, it's related to verification of the end use. That's related to for what purpose the loan was granted. The bank is to make sure the amount was utilized for the same purpose only, right? So that's related to verification. So first step, it's related to application process, verification of the checks over there, arriving at the credit score, valuing the asset, and obtaining the NEC, and legal opinion is to be obtained, quantum of the finance is to be finalized, pricing of the loan, what's of the interest rate will be charged, advising the loan sanction, acceptance of the terms and conditions by the borrower, then after that executing the documents over there, and further releasing the loan, that is a disbursement of loan, and further verification of the end use, right? Now let's have a look at the different models which are available for the loan processing. One of them, it's related to standalone model. Now standalone model is actually the branch side model. Let's say case there is a branch, and further there was a loan applicant person A, there was a loan applicant person B. They actually visited the branch. Now person A actually visited for the home loan, and person B visited for the consumer loan, right? And particularly the branch will be processing the loan one by one at their own, and further they will be looking into guidelines, whatsoever the detailed policies they are related to retail loan, and whatsoever the application is to be considered, is to be taken, and they will be obtaining the different necessary documents, and further they will be sanctioning the loan on their end and independently, and they will be disbursing the loan independently to the borrowers or the vendors over there, right? So that's a scenario related to the standalone model, that the branch itself will be responsible for each and everything over there. And when we are talking about the centralized model or the vertical model, in that scenario what happens? In that scenario it is said to be, it is basically called for different names in different banks over there. It may be said to be the retail loan hub. We may also call it retail loan factory, or retail asset processing centers, or retail loan branches, or retail loan processing centers. That is RLPC over there, right? So these are the different nomenclatures which is actually used for the centralized model for the retail loan processing over there. Kindly please take a note of it. Now in that scenario what happens? Whatsoever loan application which will be received by the branch will be just asking for the required documents. They will be scanning the documents and will be passing through these documents and the scanned copies to the centralized channel over there, where the standardized process will be followed, and it will be the decision of the centralized process only if the loan is to be sanctioned or not, right? So all the decision making and all the things will be done by the particular centralized system only, and further the execution of the documents will take place at the branch over there, and ultimately the loan will be disbursed by the branch itself, but overall all the decision making will be done by the vertical center over there, right? Now let's understand the differences between the two. It's related to the standalone model and the centralized model. Now in case of standalone model, definitely you are dealing directly with the customer. You can better understand the customer over here, so that's a benefit that is available in case of the standalone model. But definitely in case of the vertical model or the centralized model, there is only the documents that you can look at, and further in case of the standalone model, there is no standardized approach. There is a bad point, there is no standard approach in this scenario, but there is standardized approach in the case of the centralized model over there, because each and everything will be working as per the scenario only, as per the rules, regulations, standard procedure only, right? And further, retail loans are only one part of the faster multiple activities. So it is the one part. It's not related to, they are not working on other things, they are having other tasks too, okay? And this is not only the one task they are working upon, but in the case of centralized model, it is an exclusive activity they are working upon, so they are more professional in that particular approach over there. And further, quality of appraisal is based upon the branch. Now basically it depends upon if there is a intelligent or knowledgeable personnel which is available, then they'll be taking a quality decision. Otherwise they can be ruining the quality of the retail loans over there. So that's particularly bigger and major problem that is available in the standalone model over there. But that's not the case, because there are professionals which are available who are you are actually there just for sanctioning the retail loans only, right? So processing time may differ, because the people are also having the different priorities of the branches over there. So processing time may differ, but the processing time, that is TAT, that is a turnaround time, is all same, uniform and fixed in case of the centralized model. And documentation standards may vary in case of standalone model, but that's not the case, because they are very much professional so as to maintain the centralized documents over there, right? So that will be all related to this particular video. I hope that you must have enjoyed the content and must have enjoyed the session over there. So do rate this video out of 10, and further do let me know in the comment section too that which part did you like the most. So do like this video, and further share this video among your friends and colleagues who have been preparing for Jaiib 2024. And as I told you that Jaiib complete PDFs are available free of cost. You just need to visit the website jaiib.com learningsessions.in. So simply do visit the website learning sessions, jaib.learningsessions.in, and from there just sign up over there, and after sign up just navigate to the PDF section and you'll be able to access all the PDF of all the 4 papers for free of cost over there. So that will be all related to this video. Thank you so much and see you again in the next video.